Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena. This is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But before that, let's see how the markets are really shaping up. Well, after the blowout yesterday, and in fact the heavy selling that we saw coming in from the FIIs, this seemed to be a day of recovery, but the benchmark and the broader markets have given up those gains that, the recovery that we were seeing coming in. Let's look at the benchmarks first. Let's look at Nifty first. And, Nifty is seeing a cut of almost 185 points. It's in the last 1 hour, we're seeing a sharp drop of almost 1.5% that's coming in on Nifty. It's currently trading at the day's lowest point, hovering around as that 25,000 levels. Nifty Bank is also mirroring. Nifty is trading at the day's lowest point. It has dropped 650 odd points from day's high. We have given up those morning gains. Broader markets also, we did see a good recovery coming in, but it's now caved into the selling pressure. In the second half, sectorally speaking, Nifty, PSU Bank, IT, the pharma pack, metals are holding on, in the green territory, but the rest are all trading in the red right now. And the Nifty Realty, like yesterday, is really taking it on the chin today as well. Even though it did see a bit of a recovery coming in, it really is the top sectoral loser, trading with cuts of 1.7%. FMCG pack is also reeling under selling pressure. But let's look at the gainers and the losers on Nifty. We have Infosys, ONGC, Tech Mahindra, Wipro, HDFC Life that are holding on to the green, and M&M, Bajaj Finance, Shriram Finance, Hero Motor, BPCL are trading with cuts of more than 2.5% right now. So that's largely how the market is panning up, giving up those gains, that recovery that we were really seeing this morning. But let's get started with all the stocks that are in focus today. For that, we have Vaishali Parekh, who's the Vice President of Technical Research, Prabhudas Lilladher, joining in on the technicals. And from our research team, we have Gaurav and Jinay. Thank you so much to all of you for joining us. Let's get started with all the stocks that are in focus today. Then Vaishali, BSE is the name that you have picked out for us. Tell us, how does this stock look on the charts for you?
Hi, good afternoon also. Yes, very few stocks which is showing conviction right now in a market like this. So BSE is one such stock which has already got into a strong trend, and it is retesting the previous high. So I guess now it's ready on a takeoff to look for higher targets of 4,500 to 4,700. So view is buy at every decline. 35, 3,600 acts as the support.
All right, moving on to another counter that is in focus today is Bajaj Finance. Now, Bajaj Finance shares, it dropped over 3%, after the non-bank finance lender reported its Q2 business updates that saw the slowest AUM, asset under management, growth in the last 6 quarters. The NBFC company's AUM grew 29% to 3,73,900 crores in the July to September quarter, as compared to 2,90,264 crores during the same period last fiscal. Now, despite the increase in AUM, it was still the slowest rate of AUM growth for the NBFC company in the last 6 quarters. Now, the customer franchise increased sharply to 92 million as of September quarter, compared to 7.66 crores in the base period last fiscal. Now, new loans booked rose by 14%, close to 1 crores, and the deposit book rose by 21% to 66,100 crores. Now, on the other hand, the net liquidity surplus stood at 20,100 crores as of Q2. And following these updates, Nomura remarked that credit costs will remain the key monitorable for Bajaj Finance in Q2, and they're maintaining a neutral call on Bajaj Finance with a target price of 7,500. Morgan Stanley believes that the point of focus in Q2 will be the management's confidence in the asset quality improvement for Q3, and they're maintaining an overweight on Bajaj Finance with a target price of 9,000 rupees. So that's Bajaj Finance for you in focus. But coming to you, Varun, Varun Beverages is what you've picked out for us. Tell us, Jinay, I beg your pardon, what do you see for Varun Beverages? What's the news flow?
Well, yes, Varun Beverages in focus as Citi have initiated a buying report. They have a target price of rupees 800, and what this basically drives their positive sentiment is the strong market position that company has in India and the growth opportunity in the overall soft drink market. They also like the company's GTM initiatives and new category creation ability overall. They believe that the company will benefit from their expanding geographical reach. They have been expanding into new territories like Africa for F&B, which will act as a positive catalyst for the company, is what Citi believes. They're expecting a revenue and EPS growth of 23% and 29% respectively over next 3 CY.
Alright, that's Varun Beverages in focus today. Gaurav, you picked out Garden Reach for us. Tell us what's the news flow in this particular counter?
Well, yes, Garden Reach is in focus, and the reason being that the company had actually has actually a contract for around 8 vessels with a German company, and according to this contract, now the company has signed contract for the 5th vessel out of these 8 vessels that they were supposed to produce, and the contract is actually in line with the option agreement that the company have, and the total contract for 8 vessels is going to be around $108 million. Apart from that, there is another news flow which is coming up in this company, is that the company has recently won an order worth 226 crore rupees, and this is from the transport department for hybrid electric ferries. Now, company will be producing around 13 electric ferries within the time span of around 30 months, and as a result, we saw, despite there is some pressure in the Nifty, we saw this stock was up. It is still trading in green, so definitely watching out on this counter on the back of the 2 news flows that we have received today.
On to the buzzers in trade yet again. Avenue Supermarts is in focus today on the back of the Q2 FY25 updates. Now, the company which operates and owns retail chain, of course, D-Mart, has reported a 14% in its standalone revenues at 14,050 crore rupees for the second quarter ended September. Now, the same stood at 12,300 crores in the last year in the last year period, but the total number of stores at the end of September 2024 stood at 377, which is a jump of 6 stores over the June quarter. And the company aims to add 45 new stores in FY25 with the medium-term band at 45 to 60 stores per annum. Now, in the preceding June quarter, D-Mart clocked in 17% growth in the net profit of at 774 crore rupees, while the revenues jumped 19% to 14,069 crores. Now, CLSA is maintaining an outperform rating on the stock and has recently hiked the target price to 5,650 rupees from 5,535 rupees. But Avenue Supermarts is also reeling under selling pressure in this market, trading with cuts of almost 4.5%. In fact, it is trading at the day's lowest point right now. But that's Avenue Supermarts, and moving on to Vaishali, coming to you. Infosys is what you have picked out for us. Tell us what are you seeing on the charts for Infosys right now?
Seeing today's candle and volume pickup, I think after a good consolidation, the trend is still intact as compared to the other stocks that we are seeing. So I would say 1870 would act as a stop loss. And I think this stock is likely to go towards 1970. So I have a positive bias right now.
All right, positive bias coming in for Infosys on the charts. But Jinay, M&M is a stock in focus on the back of brokerage notes coming in. Tell us, what are these notes saying?
Well, yes, first note we have by Investec. They are maintaining a buy rating with target price of 30 to 20. Now, what they believe is that Thar Rock's booking have surpassed their previous milestones. Also, the booking of about 176k units was registered in the initial hours of booking. They believe that the launch of this launch will further strengthen their SUV portfolio and their SUV franchisee. Also, the stock is currently trading at valuations of 28 times of FY26 estimations, which they believe will be supportive for the stock. Also, we have a note by Morgan Stanley or maintaining overweight rating, and the target price is 3304. Now, what they believe is that with Rock's ramp up, their Thar franchisee will inch up to 8 to 10,000 units per month, and the success of Thar will consolidate M&M's total portfolio to third spot in India's PV market. So, all in all, a positive note coming by both of the brokerages out.
All right, moving on, we're also getting Sandeep Sabarwal from AskSandeepSabarwal.com to share his top picks. Let's go across and take a look at what he had to say.
So Ahluwalia was there. Then I think on the large cap side, what I mentioned, like also said on Reliance, but I would think lower than what he's maybe 8 to 10% lower. L&T more near 32, 3300. So I think these immediately come to mind, which we could look at buying.
All right, those were Sandeep Savarwal's top picks. But coming to you, Gaurav, now you've picked out Angel One for us. Tell us what is the news flow here?
Well, yes. Angel One has come up with the monthly update, and when we look at the numbers, when we talk about gross client acquisition, that has increased almost by 5.6% on a month-on-month basis. Now it stands at around 0.95 million, which is around 10 lakh customers. Their total client base now stands at around 27.5 million customers, which is an increase of around 3.2% on a month-on-month basis and 61% on a YY basis. Apart from that, when we talk about overall market share, the company has actually gained market share. They have increased almost 10 basis points of market share on a month-on-month basis. Now it stands at around 19.4%, while the F&O segment the market share stands flat on a month-on-month basis at 20.7%. But what is weighing in on the stock price right now is that the number of orders. Now when we look at this number, that have declined almost by 2.8% on a month-on-month basis, and the number of orders per day has also declined almost by 2.9%. As a result, we saw some pressure building up, and there is another thing that the market is also weak, but definitely watching out on this counter, because as we know that in the last few days this counter has given a healthy amount of returns to investors, but definitely on the back of the monthly updates it is under pressure today.
All right, Angel One reeling under pressure. But with that, welcome back. You tune in to Market Fatafat with me, Ankita Saxena, where you are being taken through all the stocks that are buzzing away in trade on the back of research and on the back of technicals. So coming to you, Vaishali, Deepak Nitrite is what you've picked out for us on the charts. Tell us, what are you seeing on the charts for this particular counter? In the last 1 month, you're seeing a bit of a consolidation coming in on this counter. Tell us, what is the up move that you're seeing?
Right now, I would say that, it's holding on very well. It's still in the process of higher bottom. So we need to wait and watch, because currently it's at a good support level of 2800 levels. And we get further conviction once we see the stock moving above around 2950. That would give us a higher target of 3000 to 3200.
All right, Janay, coming to you, you've picked out a banking name, SBI, for us on the back of a management meet that happened. Tell us what were the details of this meet?
Well, yes, SBI conducted a management meet recently, and we have a note by JP Morgan on that. They are maintaining an overweight rating, and the target price is rupees 1000. Now, what they believe is that they are very confident on the growth driven by asset quality, and with ROAs sustaining about 1 to 2%. They are confident on 13 to 15% growth target for FY25, which will be driven by favorable exposure in the growing segment. Also, the company does not need any immediate capital given the flexibility by AT1 bond, investment book, and strong profitability is what JP Morgan is highlighting. Also, the private capex has not been going above the system. Currently is just showing a bit of improvement is what they have highlighted. The credit cost should remain soft with price to book value of FY 2026 1. They see quite a value for the stock.
All right, Vaishali, coming to you, you have also picked out SBI on the charts for us, but the stock hasn't really done anything in the last 6 months or last 1 month also. Tell us, is it about time that this stock really started moving up?
Yes, SBI has been in a long consolidation, and after a good corrective move, just close to the 200 moving average. So I would say the stock is looking quite positive. Today in the morning, we saw good pickup coming in. So once we see the stock coming really out of the consolidation of 810, this would be giving us higher targets of 850, 880, and 780 is the stop loss. So it makes it a very favorable risk-reward ratio category.
All right, well, sticking with the banking pack then, Gaurav, you have picked out HDFC Bank for us. Tell us what's the news flow here.
Well, yes, HDFC Bank is in focus, and the reason being that the company has come up with the Q2 updates, and when we look at the numbers, we saw a little bit of softness in terms of loan book, while deposits grew at a strong pace. So when we talk about advances, that increased almost by 7% on a YY basis, while the deposit growth remained at 15.1% on a YY basis. Let's not forget that the advances growth was a little lower than expected, and this was impacted marginally because the bank has now securitized almost 19,200 crores worth of loan in this quarter. But when we talk about deposits, the bank actually were able to maintain was able to maintain healthy LCR and LDR ratios. The implied CASA ratio declined almost by 96 basis points. But when we look at the loan to deposit ratio, which was one of the concerns for HDFC Bank, now that has eased almost by 325 basis points. An implied number says that this has come down to 101%, and the bank has also reported LCR ratio of around 127%. Other than that, what is another catching thing for HDFC Bank is that when we look at the September shareholding pattern, the FII still has some healthy room, about 20%, which leaves another a fund flow of around 1.8 billion worth of opportunities in HDFC Bank according to Nuvama alternate quantitative research. So definitely watching out of this counter. Now that the numbers have come a little weak, but when we talk about the opportunities, it seems that they are being a little bullish as per Nuvama's view on HDFC Bank.
All right, moving on from HDFC Bank to Bank of Baroda. Bank of Baroda is in focus today. In fact, this stock climbed almost 4% today on good set of healthy updates that came in. In fact, they've announced its provisional business update for the second quarter of the financial year. Let's look at what the updates look like then. For quarter 1 FY25, while also delineating its plans to sell its Oman operations to Bank of Doha, the public sector undertaking has reported a 10% year-on-year growth in its global business to 25 trillion rupees. Now, further, the bank's global advances have also grown 11% on a year-on-year basis to 11.43 trillion as of 30th September 2024. Now, on the other hand, the domestic advances have soared by 12.5% to 9.39 trillion rupees. Now, Morgan Stanley has also come out with a note on it. They are also, weighed in on the business updates, saying that they're maintaining an equal weight rating on the stock and setting a target price of 265 rupees per share. They have highlighted that the firm, the bank's strong overseas loan book and healthy deposit growth are the key factors behind its positive assessment. On the back of healthy updates coming in for Bank of Baroda, the stock is up. Right now, it is up 2.9%. It was trading with gains of almost 4% in the morning. But Vaishali, Bank of Baroda on the charts for you as well. Tell us, what are you seeing on the charts for this counter?
I would say I have a similar view. As I mentioned, PSU banks have been really not participating, and they are trying to come out of its consolidation. So today, overall, the full PSU banking sector was showing a lot of strength. The Bank of Baroda is one of them. The volume is pretty much above average, and it's trying to come out of its range. So I would say the view is positive.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.